Hey traders and investors, it's Serge Berger here. Today I want to go through something very straightforward. It's something that I've gotten a lot of questions on over the past couple of weeks, as of course we've been in the middle of earnings season. And that's really how do you play earnings after the earnings have been released. As many of you know, I'm a big proponent of waiting for the earnings to come out and then do a trade in the back of that. There are multiple ways of doing this. One of the most straightforward ways of doing it, in my opinion, is to wait for confirmation the following day of so-called follow-through buying or follow-through selling. I'll give you one example of that to give you a bit of an idea of how straightforward really it can be. So this is Netflix. Okay, Netflix, we all know it's a very volatile stock. What Netflix did is it dropped, and you have to. What's important is that you have a little bit of context when you do these trades. You need to understand that, let's say in the bigger picture, Netflix here has been in a very choppy trading phase for all of 2014. It had some sharp rallies, it had some short sell-offs, it had that sharp down gap here on the October the 16th, I should say, and it's found good support. So when the stock came into earnings, it had some very clear lines to focus around for investors, namely, it had very clearly defined resistance and very clearly defined support. A break below support here on a meaningful basis would have probably pushed the stock well lower. Just like a bullish reversal as we ended up having, we had a big up gap on the 21st of January, had the good potential of seeing continuation buying to the upside. So what you want to do, again, it's important that you keep a little bit of context in this. Once the stock gapped higher in the 21st of January, that to me wasn't the day to do something yet. That's a matter of style, right? It's a matter of strategy. The trade to me came the following day, once the stock actually continued to push higher and pushed past the previous day's highs for I think about 30 minutes roughly is what I waited for. This depends on the volatility of the stock. So something like a Netflix, you don't have to wait as long as some other stocks, but um, basically that then set up a trade for this stock to actually completely fill the down gap from October 16th, and has of course in the meantime done just that. That would have made those that traded this would have made anywhere between say between 3 and 10% or 8 or 9%, for a very straightforward risk reward post earnings trade. So I hope this makes sense, guys. Again, trading doesn't have to be easy. You just have to stick to the high probability trades. If you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Otherwise, you can go to thesteadytrader.com and set up for the daily trade alert service there. Good luck, and I'll see you in the next video.